How do I help business owners like you scale up their business? Our mission is to help small business owners exactly like you. So please click the bell and subscribe so we can get our message and our connections with other small business owners exactly like you. Have you ever wondered how accountants contribute to business growth? Have you ever wondered how they can take you from surviving to thriving? Follow my video and I'll spill the beans on all. When you are scaling a business, you are looking to get to your personal goal. And that will be driven by various business goals that you'll set in your business. Now that could be via exit, where you're looking to sell your business for an amount of money, or it could be accumulating wealth as your business is surviving, or a combination of both. Now when you're scaling a business and you're looking to improve it, there's lots of areas you need to look at and it can get seriously overwhelming. So on this video, I'm going to explain to you the key things that we look at on a regular basis that will help your business really understand it so you can make better decisions and grow it in the future. The first place to look at is revenue. And revenue is here. And what you want to be doing is looking at your revenue for the month, revenue for the quarter, and revenue for the last 12 months, and you want to see this every single month. And what you're looking for is variations. Now, ultimately, we'd all love it to go straight up in a perfect algorithm. That would be wonderful in the land of milk and honey. I get in a lot of businesses, they can be seasonal. So you could have some times of the year where your income's up and some of it's low, and that's just the way your business rolls. But what you want to be comparing on is how were you compared to your last periods? Because there's no better measure than measuring against yourself. And how are you measuring forward in the future when you look at a budget? So have a look at this revenue graph on here. This is a fictional data, so I'm not sharing any of our clients' information, but you can see clearly on here what the revenue was like this month, what it was like last quarter, and what it's like over the last 12 months. And there are bits in this data that are good, and there are bits of data in here that's concerned. So if you look at the 12-month chart, it's slightly down. Not by a lot, but it's still cutting downwards. Now, what is the reason behind this, and what can you do to then make your business better? This is area number one. Businesses win and lose through their gross margin. Businesses, if they're going to make a serious amount of profit or lose an amount of profit, can be within their margin percentage. This is going to be your gross profit. So what you want to do is have a handle on how good your gross profit is month by month, quarter by quarter, year by year. Have a look at this data here. You can see that the current GP for the month compared to the year to date, all of these figures are up, and we've got a nice little tick on each one. So that means the business is improving their gross profit margin, which should ultimately impact on their net profit. This is a cool driver to look at. And how often do you review your gross margin within your business, and how accurate is it? Overheads. For most small businesses, overheads are not really going to change much with activity. They'll be fairly fixed. Now, they can also be stepped as well, that sometimes you'll just have to up it a gear, where you'll need a bigger load of software, you may need bigger premises, which doesn't happen all the time. When you move premises, you've got your upper level of overheads. But it's easy also for overheads to get out of control if they're not looked at. And it's easy for waste to be occurring in your business through your overheads. So what you want to make sure you've got a handle on is what are your overheads per month, and how do they compare to last quarter? How do they compare to the year to date? Because this could be waste within your business that is profit that is going down the drain. Now, I'm not saying be a miser, because I'm a big fan of investing in the business as long as it's providing value. So are them overheads providing value to your business, or they're old direct debits that sounded a great idea at the time that are just not being used? How much do you have a handle on your overheads within the business? And are you looking at these on a monthly basis where you're comparing it to quarter and annually at the same time? Have a look at this data here, because you should be getting this every single month. The point why we're all in business, net profit. After you've made all of your accounting adjustments, and because if you put rubbish into a system, you get rubbish out. Once you've made all of them accounting adjustments, how much money are you truly making? Because this is the money that you'll need to support your family. This is money that you'll need to live. And also you may want a chunk of that net profit to reinvest in your business in the future. I think that's really sound. So how good is your net profit per month? And yes, you do have seasonal variations. So if you're comparing one month, you want to compare it to the month of the prior year, but that for that reason. But you also want to look at it on the quarter, and then how is that compared to previous quarters? And you also want to look at it compared to a year as well. The main rule that you're in business, where all of these drivers come from, is net profit. How often are you reviewing yours? Now, taking our way off the profit and loss account, we're looking at the net worth of your business. So in this fictional data, this is the net worth here. So this is basically the easiest way to understand this as a small business owner is profit, less tax, less dividends. This is what you're left with. And that part that you're left with, as well as what's been accumulated in the past, will be your net worth. So on your balance sheet, how strong is your balance sheet? Because in 2024, it's quite uncomfortable times. And you need strength sometimes to get through lean periods. You need to get through surprises. You need to get through pain. And having resources there, which is capital, will get your business through some tough times if you need it. That's all very well and good, Michael, but how do I get there? I think that's a great question, because it's very easy to concentrate on, oh yeah, we're going to get this profit and this turnover. But the important part is how you're going to get there. So in its most basic forms, look at this data here. So what you're looking at this data is how much is each of your transaction values. So literally in bare basic bones, how many invoices have you sent to your customers across all of them? And what's the average value per invoice line item? Do you know that for your business? Are you undercharging where you could basically charge more? Or are invoices getting missed that have just disappeared, which is just money going up in smoke? So if you understand them two revenue drivers in its most basic form, it will give you something to go at, which will help you increase your revenue. And if you increase your revenue, we can then look at the other parts to help make yours better. One of the other things that's really important to concentrate on is your customers. What most small business owners look at is the new customers acquired. If they're going to increase revenue, they go, right, what can I do? What can I do that's new, kind of thing, and go and get them. And I still think that's a really important metric to look at, because if you're growing a business, you're going to want to do that by actually growing customers. So if you're comparing this year to last year, how many new customers have you acquired? And how many new customers did you acquire the year before? Do you have that data within your business? Are you measuring it on a monthly, quarterly, or annually basis? Because if you're not, you may be missing a trick. But the easiest way to keep your business alive is to not mess up your customers. So if you follow our business growth program, we talk about this in detail about why customers leave businesses. So you actually want to look at how many of your customers do you retain? And I'm going to say in its most basic forms. Have you invoiced them last year? Have you invoiced them this year? Now, it's very easy to say, oh, Michael, we have long-term cycles on our customers. Yeah, I get that. And you've got some businesses as well where it's a one-off transaction. If you're going to build an extension for a house, they're not going to come back and buy another one. So I get in a few industries that you won't get repeat customers. Most of them you do. So how many of your customers you're retaining year on year on year, and how many you're losing? Because one of the quickest ways to reduce the size of your business is to have customers that are completely cheesed off and they don't come back to you. Ultimately, you're going to lose in the best part of 150,000 in revenue. After your gross profit margin, how much potential revenue is being missed off your bottom line every single year? Cash flow is a massive area for small businesses just like you. One area normally where cash is really tied up is money that is sitting in debtors or accounts receivable. They're both the same thing. So how much money is sitting in your debtors, and can you convert that into days so it's easier to comprehend? So if you've got standard debtor days of 30, what is your current run rate for your debtors calculation at the minute? Is it 35? Is it 40? Is it 60? Or is it 122? Or are you killing it where customers are paying early and your debtor days is 21? Because it's really important to track these numbers, because it's easy to comprehend when you actually turn it into days. But ultimately, you're looking at basically taking your money out of your customer's bank account and put it into yours for work done. Now, we've worked with some customers where we've reduced their debtor books by 200, 300, 400,000. And how great is that? You're then taking that money from your customers for no extra charge and putting it into yours. You can then use that money to basically pay off loans, you can use it to invest, you can use it to thrive, but ultimately it's back in your bank account. Now, the second part to bear in mind is also creditor days as well. Now, ultimately, if you've got key suppliers, you don't want to cheese them off. But ultimately, if there's a way of extending your creditor days, you are getting interest-free money. Now, I'm not saying do what some of the big companies do and take 365 days payment terms, because there's an element of fairness as well, because we're all small business in this together. But what about if your average creditors was 200,000 and you was on 15 days? Well, if you doubled that to 30 days, that could make your creditors 400,000. That could mean that 200 grand is sitting in your bank account rather than theirs. And that 200 grand, how much benefit could that give you in working capital? Give you money to play with and invest? How much of that could be then used for early settlement discounts, otherwhere where you buy things in bulk? Or even if you put it in a deposit account, earning 4.33% interest, that's a tidy sum by the end of the year. So if you're looking at creditors, and I'm not saying be unfair, but how could you squeeze them so it's just a little bit longer? Now you'll see that I've demonstrated this report that we can run for all of our clients. So if you've got QuickBooks, Sage or Xero and you allow us permission, we can run this business overview report just for you. We can give you some of the key drivers that are coming out of your business to say, look, there could be some problems here. If you would like one of these summary reports, I'd happily gift you one of these today. All we would need is access to your accounting system for a brief period, and I can run the report. I'll back this up in a meeting with you to show you key areas where you can potentially work on, which should give you good value towards your business, which you may not be getting now. We also have a range of webinars that are designed just to help small business owners like you. We have one that's called our Business Growth Program, where we're looking at businesses that are looking to get hold of money where they're going from surviving to thriving and scaling too. We also have another one that's called Exit Planning 101, which the clue's in the name. You're looking to sell your business for an amount of money that would be awesome. We also have some ad hoc webinars too that are just there just to provide loads of value. Click the link below and I'd love to see you on one of our webinars.